Hi everyone, welcome back to this series of Amibroker tutorial videos. This one in particular is on a moving average crossover. The moving average crossover has been used, I think it was probably one of the earliest trading systems ever created really. It was the 5-day and the 20-day moving average crossover was used by Richard Donchian in the late 60s, I believe, if that's his name, I'm pretty sure it is, and Ed Sakota as well, and they used that to great success. Until obviously, the markets do change and sometimes trading systems no longer become profitable. What I'm looking at today is a 61-day and a 93-day moving average crossover, and it's basically the buy signal would be when the moving average, the 61-day, moves above the 93-day moving average. And we'll show you how to code it in Amibroker as well really quickly. Going to Analysis and Formula Editor, what we need to do first is just set up our moving average. And to do that, it's just MA. Now when we do MA, it turns blue, which is really great, and that means that Amibroker recognizes it and that we can also open up our bracket and it will tell us what it's expecting. So what we want is just the closing price, and we'll set up our first one, which is 61 days, and we'll close the bracket and close off the line with a semicolon. We'll do another one as well, which is another moving average of the closing price, and 93 days as well. And so once we have that, we can actually turn them into arrays so that we can reference them again later. For example, if we go moving, if we call this moving 1 and just say equals, then every time moving 1 appears, it will actually reference this and give us the 61-day moving average. And if we say moving 2, then that can equal the 93-day moving average there as well. So to do the crossover, we'll actually just do our buy and sell signals. And again, when you do your buy and sell signals, as you can see, it turns bold. So that means that Amibroker recognizes that as well as an actual signal. So we've got buy equals, and we'll just do cross. So when we type in cross, again, it does turn blue, so that means Amibroker recognizes it and we can open up our bracket. And it's just the cross of whichever two arrays that we want to use. Now we've already set up our two arrays up the top here. So what we can do is, it'd be a cross of moving 1 above moving 2. Close that off with a semicolon, and then a cell would be just the opposite, a cross of moving 2, which is our 93-day moving average, basically going above moving average 1. So in other words, the reverse. Moving 1. We'll close that off with a bracket and a semicolon, and that should give us enough information for our trading system to implement. Now, of course, when we're going to do a backtest, we should also set up our position sizing really quickly. In other words, what we're looking for is to have around 20 positions open at, or the option for 20 open positions at any one time, and also to have around 5% of our equity in each trade, or the option for that as well. So we set position size, and we want 5% and percent of equity. And I've done this in another video as well, so you can check that one out. I'll just do this really quickly so that we can get to the goods and the actual return and see how it turns out. We want max open positions in inverted commas and 20 maximum open positions. So close that off. If we save that there now, and if we go to our backtester, which is analysis and old automatic analysis. You can use the new one as well. It's definitely up to your preference. Then we just make sure that we've got the correct formula that we're using as well. So we click on pick up here, and we want our moving average that is not average, the system that we created there. Once we've selected our moving average system, then all we have to do is click backtest, and let's see what the results are. So if we go report from there, what it does is it gives us an annual return, an average annual return of 36% per annum. Now the winning percentage is around 49%, so nearly 50% of the time, which is quite good for a trend following type system. And the maximum drawdown is around 44%. Now let's have a look and see that, because that's actually quite large. A lot of people may not be able to handle that. Looking at the charts, we've got, as you can see, there we go. So the average drawdown is around 20%, and then during 2008, the big bear market there, we had that 45% drawdown. So that's potentially more than a lot of people could handle, even though it did turn $50,000 into approximately 3 million or 3.5 million over 13 years. So that's quite a respectable return based on that particular system. But what would we do? We could also add a stop loss potentially into our system, just so that we could avoid that big drawdown, or try and avoid that big drawdown. So in order to do that, let's have a really quick look. If we just edit our formula here, up the top here, and to add a stop loss, it's simply apply stop. Now, if we type in apply stop, it turns blue, so that's great, it does recognize it. We open up our bracket. Now, all of this information here, probably best if you do go to the Amibroker website, and it will actually have all the information on what to sort of input here. So it gives you a few clues, but they might be numbers instead of, or special codes, and I'll show you exactly what I mean. For example, the type that we're looking for is an absolute stop, so I believe that's 0. The mode is stop mode %. The amount will have 10%, so we'll just have a 10% stop and see how we go with that. And the exit at, okay, so if we want it to exit on the next day, for example, if we were scanning this at nighttime and then trading the next day, that's actually a number 2 in that field. And then the rest, I just put false and false. So no re-entry delay as well. Now, so obviously that's a lot of stuff to cram into that stop loss section, and at the Amibroker website it does have all of that information there, so it's a lot easier for you to check it out and to try different things as well. So if we save that, and if we then do a back test on that system, and then report again, what we're looking at now is an average annual return of approximately 28%, so that's still quite respectable. The winning percentage goes down, so we're only winning 41% of the time, but also the maximum drawdown goes down to 35%, and then the other ones are still around that 20% level as well. So it doesn't quite have the same return as our other one. For example, it only turns $50,000 into around about $1.4 million over the last 13 years. Now, obviously, this may change in the future as well. You can't guarantee the future, and you can't guarantee that this will actually give results in the future. But it seems as though by using that stop loss, we have reduced our risk a little bit. So potentially, there are a few things in here that might work for you as well. Obviously, you have to test it yourself, and you have to try it, preferably forward test it yourself, make sure that it works for you. And, change it to suit your tastes, change the stop loss if you want to, change the moving average settings if you want to as well. Everything is changeable, so it's definitely not set in stone, and it's just an idea to sort of help you with your own trading systems as well. But on the outset, it seems to perform fairly well. Obviously, the idea is that you test it on out of sample data as well. So if you have a different set of stocks, or if you have a different time period, for example 1990 to 2000, then really it's a good idea to test it on those things and to see that it still holds up, or to see that the trading system is still robust as well. So that's a really good idea, just of a moving average crossover system. I hope that's helped, and if it has, please shoot me an email or leave a comment in the video below, or visit me at my site asxmarketwatch.com. Until then, I'll see you next time, guys, and happy trending. Have a great week.